We approach the one-year anniversary in many places of a lockdown because of the COVID-19 pandemic. It's clear that one of the sectors that was hardest hit was travel and tourism. That is a global phenomenon. It's also true that those stocks are ones where investors have some optimism about the reopening trade, and we've seen them shoot higher on various data points. So when is the right time to think about things like cruise lines and other hotel businesses? Tuna Amobi is with us now. He is director and industry analyst with CFRA Research. Tuna, always good to have you with us. We're hearing from some hotels. We've heard from some already, cruise operators. Overall, what do you expect to be the tone of what they have to say right now in terms of what's happened in the past quarter, but what they're looking ahead to?
Well, I think the hotels are actually in a very, very early stages of recovery. We are seeing that a lot of the hotels are just starting to see sequential improvement. That being said, I think that what we saw from the hotels that have reported indicates to us that the road to recovery is going to be much longer. There has been a deterioration in some of the key metrics that we watch, including RevPAR, occupancy, as well as average daily rate. All of these decelerated due to the surge in COVID-19 that happened toward the latter part before. With that being said, I think the outlook is that there will be some pent-up demand that will be blocked as we look towards the second half of this year with the widespread availability of COVID-19 vaccines.
When we look at a comparison, Tuna, of how the S&P 500 is done and then consumer discretionary, which houses these stocks, and then break out hotels, resorts, cruise lines, clearly there's a lag, and I think we would expect there to be a lag based on the reality that they face. And yet there they are moving higher. Do we attribute that recovery to real revenue during a pandemic, things like hotel revenue from staycations, people not traveling but staying in their local hotel? Or how much of that is about sort of optimism about getting back to 100% when we get a vaccine out there?
That's a great question. I think it's a little bit of both. There's been undoubtedly some structural changes that COVID-19 pandemic has wrought within the overall hospitality industry, whereby there's more and more awareness of the short-term, rentals for longer stays, such as Airbnb, et cetera. So there's definitely, some of the hotels that are trying to tap into that space. But to your question, I think that, the average consumer out there, based on our channel indications, are still showing a lot of propensity, to travel. And when you look at, passenger screenings, for example, from the TSA or even indices of road travel, there is no question that these indicators are continuing to improve. They were improving faster before we saw the recent surge, even though we're still well off pre-pandemic levels. So looking ahead, we think that by H2, second half of this year, when the vaccines become widely distributed, there's definitely the consumer out there who wouldn't have otherwise considered travel. Now, remember, the recovery we're seeing is largely driven by leisure travel. And within the U.S., that pent-up demand should benefit from the additional stimulus package that's been now discussed. The corporate travel is one area where we think the recovery could be more delayed. But even then, there are indications that the bookings in that space for group travel and transient are starting to show signs of life. So between those two elements, leisure and corporate / business, we think that the hotel industry could be, in fact, in a position, especially the larger hotel operators that have significantly downsized their cost base, should see improved operating leverage. With that being said, we don't think that the return to pre-pandemic levels will come anytime before 2023 at the earliest.
And we know you've got a hold on Hilton and Hyatt, but a buy on Marriott. What does Marriott have going for it that gives it that preferential? Is it less business and more leisure, to your point?
It's a little bit of a relative valuation call here. Marriott clearly is the largest of them all. They had just integrated Starwood acquisition before this pandemic hit. I think they've leveraged this pandemic to reinforce their liquidity and financial flexibility. So they're in much better shape, from a balance sheet perspective. And one of the things that happened with this pandemic is that it's almost like the strong are going to become stronger on the other side, and the weak will become weaker. And we're seeing that not just in hotels, but across a whole lot of areas. So within the hotel space, while all of the metrics are pretty much going the same direction for just about everyone, including Marriott, on a relative basis, on the other side of this pandemic, we think that they are going to be in a very good shape to leverage the incremental scale that they have. Granted, they just, as you know, the CEO had passed away earlier this week, and they have two veterans that that co-sharing the responsibilities, and expect to announce a replacement within the next 2 weeks. So Arne Sorensen was definitely a visionary, but we think Marriott has a pretty deep bench that makes us believe that there will be not much strategic disruption going forward.
Yeah, Sorensen was a good man. One of the other industries that has been so interesting to watch has been the cruise lines. Tuna, early on into this pandemic, we thought, who would go on a cruise again once it could turn into a healthcare hotel / prison? And it turns out lots of people would. The minute some of them opened up, they were sold out. Are you expecting to see back to 100% demand in pretty short order, or do you think the longer this pandemic goes on, the more damage it does to rebuilding?
Oh, I have to tell you, there's no industry out there that's arguably been so savagely impacted by this pandemic as the cruise industry. We think for them it's a really, really, tough road ahead. At this point, there isn't even visibility on when the cruises will return to any semblance of normalcy, of full schedule. No one really knows what the new normal for the cruise industry is going to be like, and there will be a new normal with all the new health and safety protocols. All of the indications out there show us that the cruise industry will not return to pre-pandemic levels before 2024. So as we sit here, all of the three major operators have arguably bought some time in terms of extending the runway for their financial, for their liquidity, potentially through the end of this year. But when you're burning cash about north of $500 million, for example, for Carnival every month, and even though you're sitting on $9 billion of liquidity, you have to ask yourself, how long these operators are really gonna hang in there. As long as the cruises remain hobbled. So we think that they're in a very, very precarious situation. We still have we're neutral on the shares, largely due to the significant sell-off that's already happened. We have a sell on Carnival, hold on Norwegian, and hold on Royal Caribbean. So fingers crossed here. I think there's also pent-up demand, to be sure, but the consumers that we see out there are not in any rush to go back into business as usual. So that's really one area where I think we're very, very, cautious, and arguably the overhang will continue to be an issue for much of this year, at least.